Hey, welcome back guys. Welcome back to Smart Wallet and Me, where financial wisdom matters. I want to wish everybody a happy new year. We're going to get started next year, this coming Monday, with the new year, with a new stock market. And we're hoping that this year we're going to do much better than we did in 2020. So today I want to be talking about NIO, Li Auto, and Tesla because they just came up with their delivery numbers. And I want to show you guys what's really going on and how their numbers relate to each other. So let's get right into it. So guys, here's this article on MSN Money. It says that NIO's record run continues as deliveries spike 121% in December. EV maker confirms sedan launch on NIO Day. NIO announced record monthly deliveries for December that underlined the strong momentum the company is experiencing. NIO's deliveries climbed 121% year over year to 7,007 vehicles in December, the company said in a release Sunday. The total unit deliveries comprised 2,009 ES8S, 2,493 ES6, and 2,505 units of its newly launched EC6s. Sequentially, deliveries increased 32.43% from the 5,291 vehicles delivered in November. Even though 2020 was a very challenging year for everybody, including the EV market, this company, NIO, actually climbed in their deliveries by 121% year over year. And that's a very good sign because if the coronavirus goes away and we get a better amicable market environment, I think that we should see a better market in 2021. For the fourth quarter, the company delivered 17,353 vehicles, representing a 111% year-over-year increase. That's a good sign. The company's earlier guidance had estimated quarterly deliveries would be 16,500 to 17,000 units. Growing recognition of NIO's premium brand, competitive and compelling products and services, and an expanding sales network contributed to the strong performance, the company said in the release. NIO noted that its battery-as-a-service scheme has been popular among its customers since its launch. After adding an option of providing a 100 kilowatt-hour battery pack, penetration of BaaS reached about 40% of its new orders in December. In 2020, the company delivered 43,728 vehicles, a 112.6% year-over-year increase. Now looking at Li Auto sales, they also crushed their sales compared to last year, because this article in Baron says that Li Auto, like its electric vehicle peers NIO and Tesla, had a very strong finish to the year. The Chinese EV sector remains on fire rolling into 2021. But the stock has not been doing very well lately, but the deliveries have been on par, just like with NIO is and with Tesla. Because I'm going to show you right now how NIO and Li Auto is going to be challenging Tesla in their own market in China. The Chinese maker of the Li 1 SUV delivered 6,126 vehicles in December. That's up from 4,646 in November and up about 530% compared with December 2019, 1 year ago. It can be a little hard to get a consensus delivery number for Li Auto and other Chinese EV producers because they're still new companies, so it's very hard to put a figure on them. Most of the analysts are based in Asia, and aggregating a consensus is difficult. Tesla, for instance, delivered more than 180,000 vehicles in the fourth quarter, which was better than the roughly 176,000 analysts had projected. Still, the Li number is very strong, even without a true analyst consensus for comparison. The company on its third quarter conference call said it expected to deliver 11,000 to 12,000 vehicles in the fourth quarter. The company ended up delivering 14,464 in the fourth quarter, easily beating its own initial projections. That is very solid for this stock and for this company, and I'm waiting to see what's going to happen tomorrow when the market opens up for Li Auto and NIO and Tesla. NIO delivered more than 7,000 vehicles in December, as we just said. Combined with Tesla and Li results, it appears Chinese EV demand remains very healthy. XPENG, the other US-listed Chinese EV producer, hasn't released their December deliveries yet. Calling the stock price reacting to even good news can be hard sometimes. Li's stock dropped after reporting November deliveries. Li also sold more stock to raise cash around the time November deliveries were announced. EV stocks are definitely in a bull market, and it just has begun. Tesla rose about 740% in 2020 and is now the world's most valuable car company by a wide margin. Li's stock closed 2020 at $28.83, up substantially from its July $11.50 IPO price. According to this article, the gains make Li and the Chinese EV sectors as a whole expensive. Barron's recently wrote that Chinese EV stocks were too pricey for us. That article appeared in mid-December, and the Chinese EV stocks on average trade about where they did back then. However, analysts for the most part disagree with Barron's. More than 60% of analysts rate the three Chinese EV stocks, NIO, Li, and XPENG, a buy. The average buy rating ratio for stocks in the Dow Jones Industrial Average is about 57%. So on these three stocks, the analysts are 60% saying a buy, whereas on the Dow Jones Industrial, there's about a 57% saying there's a buy. So there's a much greater rating for these three stocks than there is even for the Dow Jones. For Li, about 64% of analysts covering the company rate share buy. The average analyst price target is about $37 a share. Monday should be an interesting day. Investors have Tesla's recent Model Y pricing in China to deal with. A Model Y is priced below a NIO EC6 and right around the price of a Li 1. That might be a concern for investors, but the delivery numbers look good. I wanted to show you guys this article from Yahoo Finance that says that Tesla's coming up to the end of its first year selling China-made cars with a commanding position in the world's biggest electric vehicle market, but Elon Musk shouldn't rest on his laurels because he has a lot of competition coming up in 2021 because Li Auto, NIO, and XPENG and all these other electric vehicles makers that are in China are coming up right on the heels of Tesla, and they're pushing them harder and harder, so that Tesla now has no choice but to reduce the price of their vehicles in order for them to compete. So it's going to be very interesting in 2021. While Tesla regularly topped monthly premium EV sales tallies this year, helped by the sedans churned out from its multi-billion-dollar plant opened to much fanfare in Shanghai last December, 2020 was also marked by rivals catching up. In 2021, the breadth of the competitive attack that Tesla faces will be even greater than ever. Here's this chart that I wanted to show you guys from June, July, August, all the way to November. You can see here the Tesla monthly car sales in China have been steadily going up, except for July. It kind of went down, but it's been going up since July through November, and there was a big spike in November and in December. And when you combine the total sales of NIO, XPENG, and Li combined in China, they're slowly getting up there as well, and they're kind of bringing in the competition to Tesla. That's why Tesla is starting to lower the prices on their new Model Y cars, just to see if they can compete with the Chinese industry and their manufacturers. So it's going to be an interesting year. There's going to be some changes made, it looks like, with the competitiveness of Tesla with all these three other companies. But it is yet to be seen what's going to happen. But it will be very, very interesting. I just wanted to share this information with you guys. I hope you guys like this video. Please take a minute and click on that like button for me. It would mean a lot for me. And also, if you haven't subscribed already, please consider subscribing. And I'll see you guys in my next video. Thanks for watching.